About a week ago, I downloaded a stock trading app called Robinhood, and I knew absolutely nothing about
Yes, well, enough of that. The whole notion of day trading is that there's a trend, pattern, or bias in share prices. That you see there's a low price when you buy and a high price when you sell. There is absolutely no evidence to support this view, and it is almost a guaranteed way to lose money if you think you can time the market and realize when an asset is either high or low. If you are a new investor and you have $10,000 or even $1,000 to invest, you should put 90% in a low-cost index fund and 10% into some individual share. And what you could do is try do the day trading on the 10%, and then you'll see how easy it is to lose all your money. But you'll only be doing it with 10%, so it won't be too bad. You should never sell the S&P 500 and never do any basic research. Don't open Excel and try and replicate the balance sheet or the profit and loss statement. So let's just have a look at the academic literature on day trading, and why don't we read this together? We document that the aggregate performance of day traders is negative, that the vast majority of day traders are unprofitable, and many persist despite an extensive experience of losses. So that's what the academics say. So let's look at another paper, and again we'll read it together. Heavy day traders earn gross profits, but their profits are not sufficient to cover transaction costs. Moreover, in the typical 6-month period, more than 8 out of 10 day traders lose money. Despite these bleak findings, there is strong evidence of a persistent ability for a relatively small group of day traders. So unless you're someone special, you're going to lose your money. And here's a picture of the advice of when you should sell and when you should buy. Sort of there's a low period there, and then there's when you buy, and there's a high period when you sell. But let's look at what really share prices do, just looking at a simulation of some share prices. Well, it's a little more complicated. So I wonder where the high and where the low are in any of these paths. So if you just look at the orange one, when do you sell and when do you buy? Of course, there is no high and there is no low. And if you look at the academic literature, they will say there is no trend, pattern or bias in a share price. That share prices may increase with economic growth, but there's no pattern you can trade on. And if you think about it, if there was, every trade on that would reduce the pattern. So all the investment banks, if they could see, right, buy in May, sell in May and go away, if everyone did that, the advantage of selling in May would disappear. So what we can do is look at again, the academic literature on this, which is my favorite, the semi-strong efficient market hypothesis. And that says unless you have material non-public information, you will not make any abnormal returns on share prices. That if you know something the market doesn't know, you can make money. But if you're sitting at home just watching the news or reading the newspaper or monitoring the internet, there is no way you're going to make money with that approach. Earlier on, I said you should never do any research. And the reason for that it's already in the market. And if you think there's something in the market that Goldman Sachs or Citibank or ABN AMRO don't know about, then you are misguided. That information is already in the market, and they will have access to satellite imagery about some of the most advanced analytics in the world, and the notion that you will know something that thousands of investment bankers don't is just not supported. So there's no need to do any research, no need to open that Excel spreadsheet. That information is already in the market. So what you should do is put 90% of your money in an S&P index fund, day trade with the 10% you have left over, so you can lose all your money there, but just see it as a small part of your portfolio. Never sell the S&P 500, that will grow sort of 7 to 9% a year, and there's no need to do any research. So good luck with your portfolio. I think the S&P, you won't need it, but you certainly will with day trading. Oh, and by the way, you might want to Google the application for Robinhood and just see how they actually make their money. I think they sell trading information onto brokers. As I always say in the internet, if there is no price on the product, you're the product.
Line up and recalculate where the new resistance and support lines are, and that's how they make their money. That's the basics of